I know. Better late than never. I know. Apologize to keep you waiting here tonight. But it's time to get back to work, though. It's Wednesday evening. It's October 14th, 2020. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's great to have you with me. My job tonight is to help us find the best trade setups for tomorrow. That's Thursday's trading session. I got a jam-packed video in store for you guys and gals tonight. Charts are all prepped up in the background. As you can see, got the S&P, got the oil, and of course, we got the gold, the yellow metal on our radar for tomorrow. Boy, speaking of tomorrow, going into OPEX, the ECB summit, we got some rollover, we got some big news tomorrow. Boy, oh boy, there will be no shortage of reliable trading opportunities setting up for tomorrow. Before we jump in, though, and get this plan put in the night on the video, I just want to make sure to remind you guys, if you haven't done so already, make sure you subscribe to our YouTube channel. That way you don't miss all the good stuff we publish every evening on this video. So make sure you subscribe. And don't forget, if you have any questions for me, drop those questions in the comment section below and I'll get them answered for you as soon as we finish up with the video tonight. And as always, I really appreciate you guys tuning in every evening. If you love this video as much as I enjoy making it for you guys every evening, I really appreciate you guys hitting that thumbs up button for me here on this nightly newsletter. So again, make sure you subscribe, drop those questions in the comment section, and thumbs up if you guys find value in this nightly newsletter. But as I mentioned earlier, I'm a little bit late to the party here tonight. Let's get this video going. Let's check the calendar for tomorrow, going into the last half of this third week of October. Now, where did we pick up from last night's newsletter? Last night's newsletter, we talked about this third week of the month, right? Third week of the month. Now, what does that mean for us? Well, it means that Friday's OPEX, so options expire end of day on Friday, right? They technically expire on Saturday morning, but Friday's the last trading day for options. Well, not really trading day, but options expire at the closing bell on Friday. Now, that is important for futures traders, especially traders on the NASDAQ, the S&P, the gold, the crude oil, right? All of the major futures markets, because they're going to be used as hedging, right? A lot of options traders will hedge their positions in the futures market. So anticipate tomorrow, Thursday, and Friday, we are expecting to see a little bit of a bump up in volatility. Now, in addition to that OPEX coming on Friday, as I mentioned in last night's newsletter, we also have that ECB summit on Thursday and Friday morning. Now, this shouldn't affect us too badly in our trade room tomorrow. We trade the U.S. morning session. But if you're in London, if you're in Asia, if you're trading that, 3 a.m. to 7 a.m. Eastern time, that London session, you do want to be aware. There's probably going to be some headlines. There'll probably be some market moving jumps right in and around that ECB or EU summit on Thursday, Friday, right? So keep your eyes on the tape if you're trading early on Thursday or Friday morning. Also, too, we've got rollover looking pretty good for rollover tomorrow. We talked about rollover on crude oil last night, right? So we got oil rollover probably tomorrow. As I mentioned in last night's newsletter, we were tracking the volume on oil, and if I go back into my market analyzer here on NinjaTrader, you can see here that we are pretty much neck and neck right there, right? The 1220 contract, once that 1220 contract gets greater total volume than the 1120 contract, will make the move over to that 1220 contract. We're not quite there yet, so I will be analyzing the 1120, the November contract, but be aware, tomorrow does look like the day where we'll probably see that 1220 contract, right, tick a little bit higher than the 1120. And keep in mind too, there's really you really can't mess it up that badly, right? So if you trade in the 1120 contract tomorrow, then move to the 1220 on Friday. Tomorrow will probably be one of those days where the oil markets kind of split their volume between the November and the December contract. But be aware of that, right? We are watching crude oil rollover in our trade room tomorrow morning. And of course, last but not least, boy, they slipped this back in on us here this week. We're hearing more about stimulus, right? We're hearing more about stimulus. We heard all over the news feed last night about stimulus. I thought this was dead. From 2 weeks ago, we thought stimulus was DOA, flatlined, right, on the in the Senate here in the U.S. Apparently, they are still trying to revive. Now, it might be politics. We get an election coming up here. I'm not sure you're aware of that. There's a little election coming up here in a few weeks. This might be a bunch of political theater they're trying to play right now, but there is, nonetheless, though, a bunch of talk right now going on with stimulus. If we we continue to get more juicy headlines about stimulus, that definitely will be something we're watching. That's kind of a known unknown as we go into tomorrow's trading session. Again, it's probably just political theater as both sides are trying to get everyone's attention right now ahead of the election. But hey, if we do continue to see some of those big sensational headlines, it will move these markets. So you definitely do want to be aware of that, right? So stimulus, what will we hear more of tomorrow? Will they continue to kind of beat that drum tomorrow? That is something we're watching on the tape tomorrow. OPEX, of course, tells us expect increased volatility. We got the ECB summit, right? That leadership summit, right, happening early. And again, rollover, right? Don't forget rollover if trading oil on the 1120 into 1220. Now, I know there's a lot to keep track of right now, so don't forget tomorrow morning, 8 o'clock Eastern time. We'll do it all together in the trade room, right? So you don't have to do this all on your own. I know there's a lot going on right now as we go into the end of the month, or the kind of second half of the month of October. But that's why I always invite you guys, grab the link. I'll put the membership link for you guys in the description of this YouTube video. Follow that link for me. Get registered. That way, let me do all the heavy lifting for you. Come out and join me every morning, 8 o'clock Eastern time, and I'll keep track of all this crazy stuff going on in these markets right now. So grab that link in the description of this YouTube video. Get registered as a brand new member. That way, right, you don't have to worry about keeping all this stuff organized. I'll take that burden off you. All you got to do is come and have a great time with me tomorrow morning in the trade room. Speaking of tomorrow, though, what's our news look like tomorrow here? Thursday. Now, don't forget, Monday was a holiday, so a lot of news events have been pushed into Thursday morning's trading session. You'll notice there is no shortage of news at 8:30 tomorrow morning. We got jobs, we get the Philly Fed, we get the manufacturing number, and let's just throw in some import-export prices on top of that just for kicks. But you can definitely tell there's a lot of potential market-moving events at 8:30 Eastern time tomorrow. That is great because that will hopefully give us a little kick in the pants, right? Get these markets moving early in the session tomorrow. Looking forward to a great day tomorrow in the trade room with you guys at 8 o'clock Eastern time. Later on in the morning, don't forget your oil report. Those are usually on Wednesdays, but because Monday was a holiday, it's pushed back to Thursday at 11 o'clock Eastern time. So keep your eyes on that too, right? There was no oil report today. Typical Wednesday has an oil report. It's been pushed back to Thursday at 11 o'clock Eastern time. And again, don't forget, we get the rollover watching here for tomorrow, right? So don't forget, right? Let me know if you guys need help on that. If you need any help on rollover, just type those questions into the comment section below for me. So don't be late tomorrow, 8 o'clock Eastern time. We'll get a front row seat for those jobless claims at 8:30. That's probably the big headline news, right? Jobless claims and Philly Fed manufacturing, probably going to be the big market moving news here. But again, no shortage of data at 8:30, and then hopefully we'll see some nice reaction to that inventory report, that oil report on 11 o'clock here tomorrow morning as well. So lots of stuff we're tracking, lots of news tomorrow. I hope you'll grab that link I talked about earlier in the description of this video. Grab that link. Get registered, that way you don't miss anything tomorrow morning at the opening bell. Let's get the charts put together here now, shall we? Let's get that out of the way. I got a lot to cover here tonight on these charts. Boy, how about gold? So gold popped, but it looks like gold might be in store for a drop, right? We may see a bit of a pump and dump here on the gold. I've got my eyes on a 1, 2, 3 reversal on the gold for tomorrow. That is looking like a pretty good setup here for the GC market. We'll talk about that here in a second. How about that oil? How about that oil? We've got some rollover coming, right? Oil, you can definitely tell oil is setting up for rollover. Now, tomorrow morning, we'll talk about how the 1120 contract and the 1220 contract will overlap on rollover. Tonight, though, we'll talk about the best places to buy this market. Get a couple really good setups we're tracking on oil for both pullbacks and breakouts going higher here. You definitely want to look at the oil chart here if you're an oil trader. And how about that E-mini? How about that E-mini? The full, complete snapback all the way back to fill that gap, or the holiday gap, as we talked about in last night's newsletter. Let's open that chart up here real quickly. Let's get working on the E-mini S&P. Here we are, right back to where Monday began. Are we surprised? Well, now you know, right? Now you know. When Monday is a holiday, well, again, it was kind of a half holiday, right? In quotations, right? Half holiday. When Monday's kind of a half holiday, everybody's at the beach, everybody's on break, but the markets are ripping. Oftentimes, price will snap back, and that's exactly what happened here in the last couple days here on the S&P. So we're right back to where pretty much we left off from last Friday, right before the Columbus Day holiday on Monday morning. And what do we know right now about the E-mini? Well, we know we're bearish. I think that's pretty easy to see, right? We can also see we're in a range, right? We're in a range. So bear market, right? Bear market into a range. That's the most important thing you want to remember. And we talked about this last night, right? We talked about this last night. We'll talk about it again here real quickly. When I have a bear market and I go into a range like this, remember the range acts like a magnet. Okay, and you want to be obviously focus on selling it. Now, there are three basic patterns I'd like to look for whenever I have a bear market, right, into a sideways range. Now, my bread and butter is to look for those buyer failures. I want to wait for the price to go up. I want to see buyers come in and try to buy the pullback. Remember, it's not a bull market, right? It's not a bull market. It's a bear market. And the range is a magnet, right? So once those buyers, once they commit to buying that pullback, you got them right where you want them. You can sell right into their stop losses for, again, what I call a buyer failure pattern. Now, knowing that that range is a magnet, we also got to be careful trying to trade breakouts going lower. There are two breakout patterns I trust most on a bear market into a trading range. One of them is what I call a 1, 2, 3 breakout. You want to see a relatively strong push below, but really what you want to see is you want to see a strong jump off the moving average. Once we get that 1, 2, 3 break down, remember the range is a magnet, so we have to get a good distance away from it, right? We got to break that magnetic field, and that's why we use that 1, 2, 3 breakout pattern. Mark that low, mark that high, and we're selling off the high of that hidden channel, right? We call these 1, 2, 3 breakouts into hidden channel pullbacks. There's one more pattern though. It's called a 2-try breakout, a strong move down. Now this one, you got to have a real strong move. Again, get yourself away from that range, then shallow pullback, lower low, and trap high above that high, right? These should all, if you watch last night's newsletter, these should look familiar. We talked about these quite a bit in last night's newsletter, but hopefully by now, hopefully you can see here those three patterns, right? It's a buyer failure using basically looking for a breakout pullback failure to sell above the high of the range. It's a 1, 2, 3 breakout pattern, or it's a 2-try breakout, right? Again, we're using the range as a magnet. If we break out lower, we got to get away from it. We're focused on selling. All right, guys, pause the video, grab your screenshots if you need to. And again, don't forget, we're going to do this together tomorrow morning in our trade room. I'll give you a checklist to follow along with me here. That way you know how to do it the right way, right? So now back to our chart now. There's my bear market again. There's my trading range. Now, one more thing. When I have a bear market into a range, I want to start looking for resistance levels above the range to combine with that entry pattern, right? I want to get a breakout. I want to get a buyer, right? I want to get these buyers to fail, and I want to sell right back into the range. It looks just like this, right? Wait for it to get up, get those buyers to buy the pullback, and sell into their stop losses. So I want to find that pattern at a level of resistance overhead. And you can see there's plenty to choose from. I got that trend line overhead. That's a great level, especially around that big round number at 3,500. I've also got that, what we call a reversal line, right? This kind of prior swing. That area is a level of resistance. And then you might have noticed here, I've got this trend line drawn off these lows up around that high. That is also an area of resistance as well. So what I want to do is I want to get up above the range. I want to look for buyers to get caught buying breakouts and sell into their stop loss. It's a pretty straightforward plan here on the S&P. I'd like to see us get up into this, right, into this sell zone overhead, up into this area of resistance. Once we do get that area, right, of resistance tested, now look for those buyers to come back and try to buy the pullback. Again, all of that momentum. We're not a bull market yet, right? I'll talk about what a bull market looks like in a moment, but that's not a bull market yet. Once those buyers commit to buying the pullback, now we know exactly where their pain is. Now we know where their stops are, and we can sell right into those stops. again, what I'd love to do is get this trend line, right? Get that trend line, get that 3,500, big round number. That would really be ideal there as we go higher here. That's one setup I'm watching for here tomorrow. Again, called a buyer failure, right? It's basically a breakout pullback failure. It's a counter trend, right? Counter trend, breakout pullback, failure pattern. How about going lower? Right, but going lower here. If we go lower, look at how much space, look at how much open space we have down there. 34.21. Look at how wide open that is. There's nothing down there. I mean, a couple of swings there. But I'll tell you, a stiff breeze on this thing right now could send us all the way down to that 34.21, especially if we keep hearing about this stimulus stuff going on right now. Now, what are the two patterns again? The two patterns were strong move down 1, pull back to the moving average 2, strong jump off 3. What do we call that? 1, 2, 3 breakout. Find the channel. Mark the low. Mark the high. Get short, right, off the high. Right? Makes sense, right? 1, 2, 3 breakout into hidden channel pullback. Now, another pattern I like to use is if the market just tanks. You know what I mean? If it's tanks, strong run down, I don't want to chase after it, and I always want to sell as high as I can. Strong move down, shallow pullback. The pullback will it'll just barely kiss the moving average and then get that lower low. Once you get that lower low, now you know it's on. You know sellers are looking at short above that high, right? Those are two patterns, two breakout patterns. Remember, we don't want to get too aggressive selling short below those lows because the range, right? The range is what? The range is a magnet. So again, go up, buyer failure, sell it back down, or get those breakout patterns going lower here, right? So failure patterns, two breakout patterns. Now, we'll do all this together tomorrow morning at the opening bell, but if you're not with me tomorrow, the next best thing, you got to grab our free trading course, our free trading classes. Everybody loves these. I get so many great emails from folks every day of the week about how much they learn in this free course. I'll put a little pop-up up there for you guys in the upper right-hand corner. If you're serious about your trading and you're not with me every morning in the trade room, right, grab that free course in the upper right-hand corner because I'm going to give you my favorite entry patterns, right? You'll learn my failures, my pullbacks, my strength, my traps. You'll learn the entire 3-step strategy, and I'll send you examples of how we apply that strategy to our favorite futures markets. Again, if you're serious about your trading career, definitely grab that free course link that just popped up in the upper right-hand corner. Get registered and make sure you join that free course. That way tomorrow night, when we do this again tomorrow night, every evening, Monday through Thursday, you'll be able to follow along with a lot more confidence knowing what these patterns look like on a real chart. Now, don't forget again, I'll put all of the links you guys need in the description as well, right? So all to join the trade room tomorrow morning, grab the free course. It's all there in the description of this YouTube video. All right, so we know what the plan is to the sell side. The sell side, I think, is pretty straightforward here right now. How do we buy this market? At this point, the one thing we got to worry about is all of this bearish momentum, right? Because if it goes higher here, again, I would assume, right, there's a lot of resistance up there, right? Lot of resistance up there that can easily become, right, areas to get short at, right? We've talked about that already. So if I want to be a buyer, they've got to really prove this to me, right? They've really got to prove this to us. So how do we get long in a bear market? It has to turn to be a bull market, right? Now, how do we do that? There's really two ways to do it here. One would be if this ends up really ripping higher, right? If it really rips higher here, right? Which is possible. It doesn't look likely right now, but hey, again, a lot of stuff going on right now. I never try to commit all to one direction. I always keep my eyes open for whatever the market gives us. If the market really rips higher here, what I'll do is I'll mark up that high. I'll mark up that low, and I'll look to buy that pullback right off the low of that hidden channel. Another pattern, which may be more realistic here, is a jump up. The pullback, right? The pullback is successful, and they jump off the EMA. That is also very, very likely here. Mark up that high, mark up that low, and now you've got that new hidden channel pullback. You'll notice I'm not trying to buy the first one. Right? I'm never trying to buy the first one because, again, that's the one that's most going to fail. This one, we go up top here, right? We go up into resistance here. Buyers will try to let them try to buy it, right? And then if they fail, we can sell into their stop losses. But if they can hold it, right? If they can hold that pullback and run, well, now that jump off the moving average is basically bears saying we're done. And once those bears are done, now I can mark up the high, I can mark up that low, and I can buy off of that low, right? So that will really be the kind of the clear cut and, very obvious reversal. The one that will take a little bit of experience will be how strong of this move. If it really jumps going higher here, I would say if the market can make it back into that range, you know what I mean? That's going to be probably probably enough to call this a bull market. We'll watch it as it goes, mark up that high, mark up that low. What you might see too is you might see it jump up like this. Moving average comes over, shallow pullback, higher high, and then you know what that is, right? It's called a two-try trap. But watch, you can also too connect those highs here, connect that low there. Oh my goodness, just give me the money, right? That's just that is a very, very reliable trade, right? A trap low off a new hidden channel. But again, right, jumping off of this low, it'll really take a lot of strength here, get up into that range and go from there. Where would these buyers be hunting for? The buyers have a very easy objective. They want to get back up, obviously, to the high from today, high from today, but their goal is to get all the way back up to retest those 35.40. I'll believe when I see it. I'm going to wait for the reversal. I'm not going to go calling a bottom on this anytime soon here because it's obviously very bearish at this point. So, will we get the buyer failure? Will we see a breakout? Will we see a complete reversal? No matter what we get here, remember what we get, don't forget, stay out of the range, right? If it keeps going sideways, wait for it, right? Don't fiddle with the middle. Stay out of the middle of the range, right? That always is the no trade zone. Let's keep going, though. S&P, got a pretty good plan there for the S&P tomorrow. How about some oil? Right? How about some oil right now? Now, as it looks here, again, it does look like we'll be really close on the volume for rollover here tomorrow on the oil. We did hear some chatter today, I recall now, from, I believe it was Saudi Arabia, who came out talking about trying to rebalance the oil markets. I wonder how much more ammunition they've got there. There's a lot of oil out there. I mean, there's a, here in Los Angeles where I live, there are tankers full of this stuff just sitting outside of the Long Beach Pier right now. It's kind of a running joke, right? The easiest place to find oil is to go is to take a ferry out to those tankers on the West Coast here. So there's plenty of oil. So I'll be interested to see what the Saudis they say tomorrow in addition to this. But they were talking about potentially trying to rebalance this oil market. I thought they've been doing that all year this year. Anyways, rollover on our radar for tomorrow. This again, you can see is the 1120 contract here. So be aware of that volume rollover here for tomorrow. What do we see right now in the oil? What's the most important factor? It's a bull market into a trading range. So it's pretty much the same plan that we had for the S&P, but it's backwards, right? It's backwards. So if this is my range, what is a range? The range is a magnet, right? Ranges are balanced areas, right? So there's three basic patterns, right? There's a seller failure pattern below the low. Now remember, what you want to do is you want to find support levels below the range, right? If we go back, I don't want to waste too much of your time here, but if we think about a bull market, again, same basic idea, right? I want to look for seller failures, right, below the range, right? Buy into the stops of those, again, breakout pullback sellers, bull market. That's the two breakout patterns again were the 1, 2, 3 breakout, mark the high, mark the low, buy the pullback, right? Remember that from earlier? And then, of course, a 2-try breakout. Strong move up, moving average comes over, shallow pullback, higher high. I love that pattern. Love that pattern. Remember, the most important thing about this last one, this 2-try breakout, is the strength of that first leg, right? The 1, 2, 3 breakout pattern, you really don't need all that much strength off the first leg, but the second leg needs to pop, right? And of course, the third, right, the first one, remember the key here? The key is find a support level below that trading range, right? So seller failure, 1, 2, 3 breakout, 2-try breakout pattern, all right? And again, I'm going to give you guys a checklist, and we'll do all of this together in our trade room tomorrow morning. So looking back at the chart right now, where do I have some support below this trading range? What I really want to get is, you can see the market pushing higher here. So we may not get that, but I was hoping we'd get a pullback into that weekend gap, right? You get this range up here. Remember that weekend gap, right? This is the gap between the closing price on Friday and the opening price on Sunday. We're also calling it a holiday gap because of that big move we saw on the Columbus Day weekend, right? On Monday morning. We talked about that right last night on the news. I don't want to waste too much time talking about it again here tonight. But that is a magnet, right? That is a magnet. So if I'm looking for a support level below the range, I mean, it doesn't get much better than that one. So that 40.52 level. I've also got this trend line drawn up over the highs and then back down to that low. That is a very interesting area of support as well. Now, at this point, again, patterns are pretty straightforward here. If we can get this thing to come back down into that trading range, go through it below it, I'm looking for those, right, seller failures. Now, the only thing you want to be aware of with this, the one thing you want to watch, and we talked about this last night on the newsletter last night, if we end up collapsing back down in, there's sometimes what happens is the market just dumps. And so you've got to be this is some of the nuance of trading with ranges. If I have myself inside of a range and I'm inside, right, and I'm inside the range and then I come lower, see, there's not a lot of momentum now for the bears. I can look for a seller failure pattern and I can buy into stops pretty effectively there, right? That's that seller failure pattern at support below that range. But let's say, for example, like we're seeing right now, let's say we go higher now and then we come running back down again. See, this is the problem. The problem is momentum. And when momentum really starts to build like that, now a lot of times what'll happen is it'll go back into the range, it'll hang out for a little bit, and then it will come down. That's fine, right? I can use that as a seller failure pattern, right, to get long below the low of that trading range. What I'm more worried about is I'm worried about this thing taking a nosedive, right? Really running lower. And then what happens is you've got the moving average comes over. And the bears, they're not going to give up without a fight. They're going to put they're going to make your job more difficult. And so because of the strength of that pullback, and again, this is where a little bit of just kind of watching it as it moves in real time. In this situation, now we use that variation pattern, right? We use that nested failure. Let them try once, let them try twice. And once we get the bears trying twice, then we've got everybody on board and now we can tip the boat right over, right? That's the idea behind this kind of, again, what I call the rotation off the high, right? So be aware of that nuance for tomorrow buying off that low, right? Again, if we go back into the range and we chop around for a while, then we make the move. I'm cool now, but it's when it really dumps, right? That's when you've got to worry about, let them try once, let them try twice, let them wrap that rope around their, proverbial neck, right? And then hit them. Right? Then hit them. Then buy into those stop losses from there. So buying underneath this trading range right now, potentially a trap, right, or potentially a nested failure if this market really does pull back here. Now, you can also see with that big breakout higher, right? You can also see here, we're already kind of setting up here now for that 1, 2, 3 breakout. Makes sense, right? There's the pattern. Mark up the high, mark up that low, find that low, and buy the first pullback off the low of that channel. Or maybe they keep on talking about stimulus and they announce a production cut, right, in OPEC, right? And all of a sudden price jumps. Right? Price jumps. If it jumps like that, that's when you know shallow pullback, higher high, right? And trap below that low, right? Does that make sense? Right? So again, same basic idea. Get that strong move up, get away from the magnet. Remember, think about it almost like how, SpaceX, right, and Elon Musk, right? They got to get those rocket ships powering out of the Earth's atmosphere to get away from the gravitational pull. It's the same thing. Well, I'm sure it's a little bit less complicated than the rocket ship, but it's the same basic idea, right? Get me away from that magnetic field, and that's ultimately why you've got to get that nice strong, right, push higher here. Now, you'll also notice too that I'm drawing up a new channel here. This is a pretty strong move higher, right? That move higher there is a pretty strong move higher. So think about this, right? Now, this probably isn't the most likely scenario, because if it jumps, it'll probably jump big, right? But think about this too. So let's just say, for example, this turns into a spike in channel, right? So we don't get the blast, you know what I mean? What happens is it goes up, it pulls back down to that low now. Now this becomes a spike in channel. We go below the moving average. We see a seller failure pattern, right, into a pullback, into a bullish pullback pattern. Those are two really good setups. You know, again, we're bullish, so I just want to find support levels here. So just kind of just look for that. You know, again, I don't expect that one, but I want to make sure you're ready for it if that happens. What I look for is that 1, 2, 3 jump, mark that new channel, buy the low of that channel, or it's a really strong run up, and you look for that 2 try. Now, what might happen is we might get something like this, right? Where you adjust this one, you adjust that one, and now we've got, you know what I mean? We've got this new hidden channel up here. So I'm open to anything. But as long as the market gives me that nice big jump, I'm finding those channels, drawing off the highs up here, and I'm just getting them pulled back. I want to buy off that low. Right, and obviously we'll know more about that once we see this stuff happen tomorrow morning in real time in the trade room. So keep your eyes on those breakout patterns as we go higher. Don't be afraid to adjust this channel if the market really jumps, right? If it really jumps like that, don't be afraid to adjust that channel there, right? Get that moving average coming up. Seller failure into bullish pullback as we go. Where are these buyers trying to get to, by the way? That 41.72. 41.72. If I can go all the way back, yep, 41.72. If they really get hot and heavy for tomorrow, right? If they really start to pump this thing up here tomorrow, leave that runner to 42, right? 42.04. That is the symmetrical measured move off today's big leg. I would be very careful, though, being too greedy. 41.72 looks to be a pretty easy objective here for a big bull breakout. And again, tomorrow morning in the trade room, we'll talk about how, you know, for example, right now, look at the difference between these two prices, right? So you got the, let me zoom in on this. Tomorrow, we'll know more tomorrow, but look at how the 12/20 contract is at 41.52. The 11/20 contract is at 41.24. Okay, that gap will likely close tomorrow, and we can use that information, that kind of that gap between these two, that creates a very big turning point. We'll talk more tomorrow morning in the trade room, right? There's a little bit too much to cover here on this newsletter, but be aware of that. Right? If we do get the rollover, it looks likely for tomorrow. If we do get the rollover, though, watch that gap between the 11/20 contract and the 12/20 contract. The 12/20 contract will try to fill that gap, right? They'll kind of meet halfway, and there's usually some really good trading opportunities, right, to be had because of that gap fill. So we got that plan for tomorrow. Last but not least here, can I sell this market? Can I sell this thing right now? I definitely can, right? I definitely can here. 2 ways to get short on this market right now. One would be a crown reversal, believe it or not. That weekend gap, if the buyers can't keep this going, if we pull back and the buyers try once, they try twice, we call these crown reversal patterns. That is an easy short off of the high. Remember, the range is a magnet, right? Range is a magnet. So again, if we pull back, the buyers try once, the buyers try twice. If you can get that, you know, a double top is enough, but a trap high, mwah, beautiful setup to get short, or it's a strong move down. And that's why I said earlier, you got to watch out, right? You got to watch out. You don't want to step in front of a freight train here. If it runs lower here, we may see bears hold on to that pullback. Once we get that 1, 2, 3 reversal, we now know, mark up that low, mark up that high, and we're selling off the high of that channel, right? Where's my target now? Easy, $40 a barrel, right? $40 a barrel. So keep your eyes on those reversal patterns, either a crown reversal or a 1, 2, 3 reversal, and we'll hopefully get one of those here tomorrow. I don't care what direction I trade in. I just want to see some nice setups here for us tomorrow morning in the trade room. Oil, we got you ready to go here for tomorrow. Oil's looking great for tomorrow. How about some gold? Now, gold is probably the trickiest of all the markets here today, right? Looking, well, maybe it is, maybe it's not. I think you're going to probably see a lot of people get fooled by this gold tomorrow, so we'll give it a good shot here to make some money on it with you guys. Let's see here on the gold. What do we have here on the gold? Well, we definitely have a strong move up, right? And you'll notice what's happened. We broke higher, they failed to retest, and they came off of that, right off that high on strength. What is that called? It's called a 1, 2, 3 reversal, right? 1, 2, 3 reversal. Now, in these situations now, momentum has swung in the opposite direction. What I'm hoping is I'm hoping that buyers will come in, try to buy this area here, and I'm hoping I can sell right into that new hidden channel. We see these a lot in our trade room. We see them a lot in our trade room where the market will make these big, strong run. In this case, it's bullish, right? They get a little bit ahead of themselves. They can't quite, complete it going. The bottom falls out of it. And once the bottom falls out of it, that momentum will likely carry things back down again. Mark the low, mark the high, and get short off the high. That's the nuts and bolts of what's happening here on the gold. They had that strong move up early, right? That leaves an open loop, as we always say in our trade room. They got the pullback. They retested their high, but they never kept it going. The buyers tried again to keep it going, and you can definitely tell the buyers, right, left the building there after they failed that second time to go higher. What I think is even more important, though, is look left. Look at them. Remember that from yesterday? Yeah, remember that big guy from yesterday? Look left. Now, why does that matter? Why does that matter? Because remember, anytime we see a big move like this, nobody wants to sell down here, right? No, that's too low. Nobody wants to sell way down there. Where do they want to sell? Yeah, they want to sell half of the ladder, right? They want to sell halfway back. They want to sell 50, 60% back. That is a price, right, that I can sell high. That is a good price. So when I look at the bigger picture, when I see this big move down, it's no surprise this market ground higher here, right? It's no surprise it popped up higher here because, again, nobody wants to sell short down there. So it pops up. The buyers try to keep it going. Now momentum shifts, and now we go, ooh, baby, how about a retest of that low? Mark that low, mark that high, and let's try to get short now, right, on that way back down. That's the general idea here on the gold. Bears want to get back down to retest the 1890 area. And like I said earlier, I'm hoping that the buyers will try one more time to buy this sucker going higher here. Now, we talked about earlier how ranges are magnets, right? Ranges are magnets. What is that? That's a trading range. We go up, we go down, we go up, we go down, up, down, right at the point. That's a trading range. So that is a magnet right there. And we're going to use that magnet to our advantage. At the same time, I want to sell short. So I want to find a level of resistance. Now, my favorite way to find resistance is to go backwards. Actually find a support line and then bring that up to find resistance. And that's where we really start to put together our plan here, right? We combine the magnet and the range along with that trend line coming down. I also have that trend line here as well. You'll notice off the wicks, that kind of creates this little slice of resistance up there. So combine that area here, and that's where we want to be looking for a short. So really there's two basics, there's two basic short scenarios. One would be we get exactly what we want. We want that pop up to sell back down, right? That would be kind of the dream come true pattern for tomorrow. The second one, of course, is going to be that 1, 2, 3, and we get a bleeder. Right? At that point, we'll mark that low, right? We'll mark that high and to sell off of that high, right? So relatively straightforward idea here. But like I said before, right? At first glance, you think, oh man, this is a bull market right now. But I don't know. That momentum, as it rotates off the high, we talk about this quite a bit in our trade room, right? Remember what I said earlier? When you've got a bull market into a trading range, I can buy below that range pretty aggressively, right? I can buy below the range pretty aggressively. But if we go above that range and then we come cranking lower, right? See, that's when momentum really starts to build, right? And so a lot of smart traders, they'll grab that low, they'll grab that high, and once it pops up, they'll short it. Right, off of that high here. This is a good example of that. So we know I'd like to get this price to go up. What I'd like to do is see these buyers, right, get caught. We can trade into a buyer failure, right? Buyer failure. into a pullback. I mean, we might see a whole gamut, right, on the way down here. If I had to guess, I would guess these three patterns: buyer failure, seller pullback, bull trap. If I had to guess, right, those are the three patterns I would expect as we go higher: buyer failure, bear pullback, right, off the moving average, and then bull trap, right, trap high. Just because that trap high usually comes later in the process because nobody wants to sell low anymore, right? Once the market gets too low, bears will be waiting above those swings, right? Opposite's true. Once the market's too high, buyers are looking for traps below swing lows, right? Once the market gets too high, we start seeing buyers come in and look for traps right below those lows. Same idea for the sellers. So those are the three patterns I would look for. Again, buyer failure, seller pullback, and bull trap, right? Trap high. If the market takes a nosedive, okay, and runs lower, couple things to keep in mind: mark the low, mark the high, get short off the high, and be aware, usually that pattern right there is not just a pullback. Usually, if I go back a little bit here, moving average comes over, it's usually going to be a buyer failure into a pullback combination, right? It'll usually be that failure pullback, right, combination pattern. And again, guys, I'm just simply drawing on this right now. If you haven't done so already, grab that free course that I mentioned earlier, because that free course, you'll see exactly what I'm talking about when I say failures into pullbacks or trap patterns. You'll learn more about that in our free trading classes right here on the website. And then last but not least here, right, how do we turn bullish? How do we turn bullish here? We turn bullish with momentum, right? Momentum has to turn. Now, there is a lot of open space up there if the bulls can get this, but they've got to show me some proof right now. To be a buyer, I want to see us jump, I want to see us hold, and I want to see us continue, right? You got to prove it to me here, bulls. Got to prove it to us. 1, 2, 3, jump off the moving average. I know it's very tempting to want to buy that first pullback, but not in this environment. Mark up that high, mark up that low, and we're buying off the low of that hidden channel, right? Or it rips higher, right? Really races higher here. Moving average comes over, shallow pullback, higher high, trap low, right? We've talked about this pattern quite a bit so far, so, right, you guys know what you're doing on that one, right? So, but again, be very careful buying this market, right, as it goes higher. The one thing I would say is kind of a question mark right now is if the market gets stuck back inside of a range for a while, right? If it gets stuck back inside of a range, those buyers will earn our trust. And if it sits there for a while, right, I'll start looking for nested failures, right? Bears try once, bears try twice to buy below that low. But we'll have to see how that looks tomorrow once we get there. In the meantime, though, look for that short. Again, targets are back down to retest those lows, right? And of course, we know we're trying to get short off that battle zone as well. Guys, most important thing, don't forget rollover on the oil. OPEX here, right? Next couple days, expect volatility. Will we hear more about stimulus here tomorrow? Most importantly, though, make sure you come out and join me every morning, 8 o'clock Eastern time. I would love to see you there with me. Look over my shoulder. You can do it right as I do it, right, every morning in our trade room. I'll put all of the links you guys need to get registered as a new member. I'll put it all in the description of this YouTube video. Please don't be afraid to call the office. I'd be more than happy to answer all your questions, walk you through the entire registration process. And of course, as always, we got live chat on the left. We got live chat on the right. There's plenty of places to chat with us here at our corporate headquarters in Los Angeles. But that's it for me tonight. I want to thank you so much for tuning in. I apologize to keep you waiting here this evening, but you know how it goes sometimes, right? The show must go on, though. I want to make sure we get this video posted as soon as I could, even though I'm running a bit late here. So be well out there. Have a great rest of your day. I'll see you guys tomorrow, 8 o'clock Eastern time. And if not tomorrow morning, we'll come back tomorrow night and we'll do it again, same time, same place on the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.